Hello everyone, this is Trader AG and welcome to part 4 of my whiteboard series where I teach you my trading methods and my trading strategies. Today we have something again really dear to my heart called daily, weekly and monthly levels. On my last video I've taught you through my Fibonacci retracement levels, how I use Fibonacci and statistically what is the best method to use it. If you haven't watched it yet, please have a watch and come back. Now, today we will start with a concept that is always on my charts if you follow my Twitter or if you have seen my charts in general. These levels are extremely important to me and these levels are one of three things I always have on my charts. Those three things are Fibonacci levels, naked point of controls, and daily, weekly, monthly levels. I count them as one because they are the same concept. So this will be really important. Have your coffee and let's get started. First of all, we have to understand what these things are. These two are candlesticks, and as we can see, we have a day that ended in a bullish green day, and the adjacent one has ended in a red bearish way. As we know here, these levels right here, this is the daily open of this day, and this one here is the daily close of this day. Now, these levels are really important to us because algorithms and bots and a lot of traders trade purely based on the daily open and daily close levels. So these levels will always have liquidity factors. Now, how I use these levels is I only give importance to them if we have two adjacent candles ending the day in different directions. As we can see here, we have a day that ended in a green bullish way, and the adjacent candle that came just after it, which closed, is a red bearish day. Let me show that on your own chart. Let's come to the daily perspective right here. And as we can see, yesterday on the 25th of September, we ended the day in a bearish way. Well, the day before it, the adjacent candle was a green bullish candle. So now what we have right here is we can draw a line right here, and this is what we call a daily level. These levels give us perfect resistance and support levels because we know that there is liquidity at these levels thanks to bots, algorithms, and traders. Another one we had here is right here, where we have a bullish candle and it's followed up by a red candle finish. Well, we have a lot of daily closes right here, right? This is a daily close. This right here is a daily close. This right here is a daily close. But the difference between these candles and these daily closes and this one is this candle is a green candle and the adjacent one is also a green candle, which means that this level cannot be a daily level. It's a following through, it's another green candle, and there is no adjacent candles that are in different directions. Same with this one. Both green candle followed up by a green candle. Well, another one, green candle followed up by a green candle, so this is not a daily level either. What we have here is a daily level, which is a bullish candle followed up by a bearish close. So this now here is a daily level. Well, the ones that we have on chart right now are this one here. You might say, why? Why don't we have this one here? Or, well, we can see here as well, a bearish close followed up by a bullish close. So this is actually a daily level as well. But the reason I don't mark them on my chart is I only mark daily levels that have been untapped. Untapped means the price action on the following days have not gone through that price. Because after that price has been traded through, that level actually decreases in importance. As we can see on this candle right here on the 24th, yesterday we had a perfect setup here where we had a golden pocket level and also a daily level right here, and we had a great reaction. We took these highs here and then we crumbled down. These levels are perfect reactionary levels. You can watch them on your order flow accounts, you can watch them on your trading view accounts, where if you see different confluence factors with daily levels, they will be perfect resistance and support levels. If a daily level has closed above us, as we know, it's resistance. If it's below us, it is support. Well, now, this level, as we know, has been traded through. We have tapped it here, we closed below it, and then we went down, and then we went up again. So this level for now is not important to us. Another important thing we have is, well, as we can see here, we have a red day here, and then a green day follow. Well, why don't we mark this level as a daily level? The reason that is because today's day have not closed yet. Currently, we are still in the same day, that green day we have, and this could easily end up being a red day. We don't know if this could go to $65,000 or $62,000. We don't know what will happen at the end of the day, but what we know is this candle is not closed yet. Daily level is two adjacent candles that closed in different directions. So this has not closed yet. This is a daily level that is forming but not formed. So I will not have it on my chart. Currently, we only have one daily level on this graphic right now. We have one here as well, but as we all know, here it's been traded through multiple times. So now I will only have this level as a level of importance and also this level right here at 65,300 that is untapped daily level. I hope that was clear for you because there's a couple things that you have to understand that it has to be untapped, it has to be two adjacent candles that come right after each other, but with practice you will understand better. So now let's move on to the weekly candles and weekly levels. Well, the weekly levels basically are the same setups as the daily levels. It means that two adjacent candles, weekly candles, that end in different directions. As we have here, you can see we had a weekly level here, and we can just mark it, and we can change the name to a weekly level. It has been right now, passed through. So will I have it on my chart right now? After this week, I will not. I will not have this weekly candle because it will be tapped after today. I mean, technically you could delete it right now as well because it has been traded through, but I feel like the weekly levels on the on the week that it has been traded through, you can still have it on, but after that, after this week, this weekly candle will be on, it will be a tapped candle as well, so I will not have it on. Another thing you can have is a monthly level. A monthly level is marked with purple. And more, as we can see here, we had a bullish monthly close and then a bearish monthly close on the adjacent candle, which created a monthly level. And this was a perfect level. If you follow my Twitter, you might have seen this level. We traded this already, and it had a perfect reaction on the 23rd, and it had a perfect reaction on the 25th as well. Now it has been traded through two times. Is it important to me right now? Is it big resistance? No, because it has already been tapped twice. If we flip this and come back, it could be support. But for now, I will not have it as resistance. So right now, as we can see on my chart, we only have that 65,354 level as an important daily. We have here our important untapped daily level from yesterday, and also another level, a sneak peek for the future is, well, actually, no, actually that is gone through as well. So yeah, basically right now, what we have for daily, weekly levels that is important to me are these two big resistance levels here. I do believe the 65,354 is more important than this one because we right now are increasing with good open interest, but you don't know what market will give you if we come here with CVD divergences and if we see a lot of positive delta coming in and we're not able to breach the level, I will of course take a short. But for now, from what I see, I do want to push up above $65,000. So that being said, I hope you understood my levels. They are really important to me. They have to be untapped for them to be weekly, daily, and monthly levels. And another final thing I will talk you through is this right here. Monthly levels are stronger than weekly levels, and weekly levels are stronger than daily levels. The reason for that is the weekly levels are traded by a lot more bots, algorithms, and traders than daily levels because it's a weekly close, it's a weekly open. Same concept goes for the monthly. Monthly levels are traded by a lot of swing positions by algorithms, bots, traders. So they are really important levels. I hope that was clear to you. These levels are perfect resistance and support levels. Sorry for that. And they should be always having some sort of confluence with them for me to trade. What could those be? Confluences. Well, with these monthly levels, I could have a CVD divergence. I could have a naked point of control, which I will explain on my next video. These could be delta and volume candles that show me that a resistance is holding up. Or these could easily be my Fibonacci levels. Weekly, monthly, and daily levels, I don't trade them by itself. I look for confluence. Just like I explained on my CVD video, I don't trade CVD by itself. I need that CVD divergence to be happening at a certain support or resistance level. So I hope that was clear. I now explained to you two really crucial trade methods, which are Fibonacci levels and daily, weekly, monthly levels. And I have also given you how and when to take those trades with CVD, delta, and volume. My next video will be about naked point of controls, another level and levels that are important to me. And then my, next video will be about the Excel charts. So I hope that this video was helpful. Please, if it was not, let me know. If it was, let me know as well. If you have any questions, you can DM me, you can put it on your comments. And thank you so much. Have a great week. Bye bye.